Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Urmas Vatakia, and we're talking about a midweek cheer for the bulls today. Sensex hitting that 80,000 mark, Nifty at a record high, Bank Nifty above that 53,000 mark, and so far sustaining. It's really banks which are cheering the market today, but a lot of action in the mid caps as well. Small cap index doing well, and most of the sectoral indices, they are in the green today.
Can't complain. It's a wonderful Wednesday if you're a bull, particularly led by HDFC Bank and all the cheer that you can see on the benchmark indices, and of course the broader markets doing well for themselves as well. But let's start off the show with the headlines that we are tracking this afternoon. Stocks push higher with the BSE Sensex scaling to 80,000 for the first time ever. Financials and healthcare are the big gainers, even as IT and energy stocks drag. Mid-caps relatively underperform.
Stocks like Angel One, CDSL and BSE are under pressure for the second day in a row after market regulator SEBI called for new and lower uniform transaction charges based on existing realizations from October 1.
KC International zooms nearly 7% but is off the day's high now after the company bagged new orders worth over 1,000 crore rupees in the T&D and renewables business. The company's year-to-date order intake has now surpassed 5,000 crore.
Federal Bank gains and strong growth in deposits. Loan growth is the highest seen in 7 quarters. CASA ratio at 9-year low. Stock up over 3.5%.
And V-Mart Retail surges after delivering a good first quarter business update. The company reports a 16% rise in the first quarter revenue. Management tells CNBC-TV18 that they are targeting high single-digit same-store sales for FY25 and are not very optimistic about margin improvement.
Okay, all right. Those are the top headlines that we are tracking. Well, yet again, let's talk about what the Nifty is doing. It's a 160-point gain on that index right now. The Sensex are 513 points. Bank Nifty almost up 2%. That's an almost 1,000-point gain on that index right now. And the mid-caps also doing well, 0.5% higher. We'll, of course, discuss the Midcap Movers in greater detail in just a bit. But again, it's an all-round sectoral move that we are seeing, barring Nifty IT, which is seeing some profit-taking today. But the cuts are not that large. Even Nifty Infra, Nifty Energy, that has come for some profit booking, Urmas.
Indeed, and there is some bit of index balancing going on as well, right? At one side, you have the banks that are leading the index higher, but then keeping the gains in check are stocks like Reliance and TCS. But yes, the broader markets are doing well for themselves. Most of the sectoral indices are trading with gains as well. PSU banks are rebounding around 0.9% higher is the PSU bank index. The small cap index too is trading with gains of almost 0.8%. But the Nifty Pharma index is what I wanted to highlight, though. It's almost now nearing that mark of 20,000 is the Nifty Pharma index. It made an intraday high of 19,965. It's slightly off the highs of the day, but still trading with gains of 0.6%. But some stock-specific moves then in the broader markets, and Nigel is joining in to take us through the mid-cap movers this afternoon. Nigel.
Well, there's plenty happening actually in the broader markets, and if you look at the PSU trading companies, well, you have STC and MMTC. Sometimes their financials are questioned, but that's not stopping those stocks. Both of them are at the high point of the day, at some cheers actually, because JM Breweries is another stock that's up in today's trading session, moving on rather large volumes. Besides that, you have stocks like Dealing. There's hopes that maybe there could be some tender or something on that front that will open up, and that's why the street is bidding up that stock. So that's up closer on 17%. DCM, well, that's up closer on 11% as we speak. So big up move is what we're seeing on some of these stocks. Castrol, there are some murmurs in the market with regards to some positive news flow. Today, the stock is up close to around 10%. You put it up for this week. In fact, it's up nearly around 17-18%. Also, a big move is what we're seeing on that one. And Subex as well. You know, it's been quite volatile. It went much higher. Then it saw a big correction. But at least in today's trading session, it's up close to around 9%. Well, a couple of these financiers, the public sector financiers that could be eligible for some bonds, tax-free bonds, and that could throw up a big opportunity because they'll be getting funding, at a lower cost. So you have HUDCO as well as IRDA. Both of them are higher in today's trading session. And Gujarat Pipavav, it's been a rank underperformer. But I think from the time JSW Infra and the likes have listed, well, that's suddenly got re-rated. And that one, even in today's trading session, is up closer to around 6.5%. Let's wind this down with a few losers, though. Some of those stocks that saw a sharp spike up, well, they have come in for some profit taking. So you have JK Paper. Yesterday, it was up, I think, close to around 10-15% odd. Vesuvius has been an outperformer. That as well has come in for some profit taking. And Atul Auto, the stock that was up more than 15% on the first day of this week, well, that as well has come in for some profit taking. But otherwise, a good day for the broader markets. Back to you.
Okay, all right. Interesting names there, Nigel. Thank you so much for joining us with that list. It's time to welcome Ruchit Jain of 5paisa.com for a technical check on the markets. Ruchit, good afternoon. Thank you so much for joining us. Well, what next on the Nifty? Still some legs to this rally that we are seeing, or we could consolidate at these levels?
Yes, hi, very good afternoon, Sonal. Very good afternoon, Hormas. Well, there's no doubt about the broader trend, which still remains on the positive side. We have seen that recently, in last 3 or 4 weeks, the heavyweights are more in momentum. Whether you take it private sector banks or even stocks such as Reliance Industries recently witnessed a good up move. Even IT stocks have started participating, which were laggards for since last 2 quarters. So I think the momentum when there is there in the heavyweights, this should lead to a continuation of the uptrend. Especially if you look at the F&O data, interestingly, FIs have about more than 82% of the positions in the index futures on the long side, whereas client section, which includes retail traders, HNIs, they have more on the short side with only 34% long short ratio. And these positions from FIs were formed before the expiry, which have been rolled on. So I think they are sitting quite comfortably with 82% long positions. So I believe that since only 34% positions are long of the clients and the client side and markets is not ready to go lower, so these positions could come to square off, and that short covering move if comes, that would help add more fuel to this rally. So I think it still has more legs to go since it's at all-time high. According to retracements, 24,600 is where the next resistance will come in. So I think it's better to trade with the trend, and I think led by the heavyweights, some markets could continue this run towards 24,600 very soon.
24,600, that's another 300 points from these levels, Ruchit. But what about specific stocks then at these levels when indices are at an all-time high, so are the broader markets? What are you recommending to your clients?
So, Ormaz, I'm sticking more with the large cap names itself because of the risk reward ratio, which is favorable there. Axis Bank would be my first stock, where within the private sector banks, a high top, high bottom structure is in place. 3 days of correction, where the 20 DMS also was not breached, and again a resumption of uptrend with good volumes. So clear signs of a continuation of the trend. One can still go long with stock below 1240 for trading targets around 1350 to 1360. And Tata Consumer is another stock which is looking quite interesting over here. The stock has went through a corrective phase in last couple of months. Around its support, we have seen a good price volume action today. Price up move supported by higher than average volumes. So the risk reward ratio is favorable over here because the stock has already gone through a corrective phase. So one can go long here as well with stock below 1090 for trading targets around 1200.
Okay, all right. Thank you, Ruchit, for joining us. So those are some technical bets. We'll slip into a short break. Abhishek Kapoor from Puravankara will join us on the other side. The company has acquired a 7.26-acre land parcel in Bengaluru, and there's been a lot more updates there. So stay tuned for that.
Back with us on Midcap Radar, and now we are joined by the management of Puravankara, and the stock has surged more than 190% in 2024 so far. The stock has almost tripled in value. The company has acquired a 7.26-acre land parcel in Bengaluru's Hebagodi. The Bengaluru land parcel has a potential gross development value of 900 crore rupees. Now, to discuss this and more, we are being joined by Abhishek Kapoor, the Group CEO at Puravankara. Abhishek, good afternoon. Thank you so much for joining in. I'd like to first start off by asking you about this land parcels that you have acquired, first in Bengaluru and in Mumbai, or in Thane as well. Now, what is the total consideration that you have paid for these land parcels, and how are you planning to fund them?
Let me share with you. So we've closed a bunch of transactions between Mumbai and Bangalore. The total GDV we have added between all of this is over 7,000 crores. The last transaction which you spoke about, which is about 7.26 acres in Bangalore, plus about another 8 lakh square foot of landowner share that we have acquired in some of our ongoing projects in Goa as well as in Bangalore. The total GDV that we have added there is about 1,550 crores. Having said that, of course, you mentioned Thane. Thane, we have added about 12.75 acres with a GDV of about 4,000. And Lokhandwala, which we had announced a little while back, that is about 1,500 plus crores. So all in all, I think we've added about 7,000 crores of GDV. And our focus continues to be on new acquisitions while we continue our launches.
Okay, so coming back to the same question that my colleague asked, how will you be funding this? What is the total consideration? Because you had indicated you'll be adding around 7,700 crore rupees of gross development value with the new land buys. You're at 7,000 crore rupees. So will there be any more land buys here, and what does it do to your balance sheet?
See, definitely we will add further lands. This is about 7,000 crore GDV added. And our focus, as I mentioned, continues because last year, if you look at what we have done, we have sold about 7.36 million square foot and we launched about 10 million square foot. This year, again, we are looking at least 10 million square foot to open for sale, about 14 million square foot of approvals. So again, what we need to really do is replenish our land bank and the land inventory. So therefore, the focus on BD and acquisition will continue. While we do that, from the balance sheet point of view, all our options are there. Whether it is debt, mezz, internal accruals, of course. As you know, we collected over 3,600 crores. We are collecting at an average of about 900 plus crores on a quarter. So accruals, then of course, equity and of course, platform transactions like we announced with HDFC some while back. So bunch of transactions that we can do. All options are open on the table for us. And we will try and maintain a very healthy debt to equity ratio.
Okay, so how much will you be spending on land acquisitions? Let me get more direct here, because that is a number which will be important to understand. Your debt increased this time around, but NCDs came down. You have approved QIP fundraise as well. There's the HDFC platform. So just to give us a sense of what will that split look like? What is the capex that you've planned for land acquisitions? How much will you be spending in FY25 and how much has already been spent?
Look, it will definitely be upwards of 2,500 crores. That's what we will look at deploying between all of these transactions. As you rightly mentioned, 1150 of HDFC is already lined up. Bunch of other transactions are lined up, which will be mixed with, of course, our internal accruals. So overall, we will look at least 2,500 plus crores of deployment in this financial year.
So the QIP that is lined up, Abhishek, the 1,000 crore rupees that you guys plan on raising, have you guys had any conversations with institutional investors? What has the response been to that? And if you could share a timeline as to when do you look to raise these funds through the QIP, because your stock has done extremely well.
Look, Hormuz, you know how this process works, so we can't at this point in time say more than what is there in the public domain. As I mentioned, all our options are open. Public markets are open. I mean, all the options are open for us for fundraise. And I'll be happy to share more information as we progress on it.
Okay, so we understand QIP is something that you've just approved and there's no finality in terms of share price and other aspects of this fundraise as well. Let me go back to the balance sheet. As I said, NCD amount went down in the year gone by. Debt went up by 519 crore rupees, and interest cost on an average also went up from 80 to 100 crore rupees. Is this a number you will be comfortable with in FY25, or will we see more increase here?
We are very comfortable with the numbers that you just mentioned. The fact is that when we repaid the NCDs, we in fact lowered our cost of capital. And what we intend to do is how we measure our business is what is very important. How we look at it is of the total area under development, we should look at per square foot debt of less than 1,000 rupees. That's how we look at our performance and our debt ratios, because that gives you sufficient coverage both in terms of debt and interest, because your average realization is say about 8,500 rupees a square foot and your debt is at less than 1,000 rupees a square foot, and your average cost of interest or debt is about at 11%. Even if I assume 11%, it's about 110 rupees a square foot per annum. So overall, I think if as long as we remain in that range bound number, we should be all right. That is one. Secondly, our net debt numbers, we are very comfortable with them as of now, and it should hover around the similar number. But our debt equity ratio, our target is to keep it under 1. So that I think we will continue to endeavor. As the value of equity goes up, then that's a different conversation to be had. But having said that, we'll continue to watch for our debt per square foot numbers.
All right, Abhishek, we leave it at that. Thank you so much for joining in and sharing with us your thoughts on the road ahead for the company. That was the management of Puravankara there sharing with us their views. Time for a short break here on Midcap Radar. Up next, we put the spotlight on KC International that's buzzing in today's trade. Stay tuned. Back on the other side.
Welcome back. You're still tuned into Midcap Radar on CNBC TV18. This is our special segment, Midcap Spotlight. Vamakshi is focusing on KC International. The stock is buzzing in trade. There have been a lot of new order updates that have come by as well. Vamakshi, tell us more.
Well, absolutely a slew of order wins for KEC. Very recently, in fact, just yesterday, the company announced that they've secured orders worth 1,017 crores and they've received these orders for EPC projects and supply of towers in the Middle East. And additionally, they've also secured the largest solar order in India. In fact, just a couple of days ago, on June 26, they also announced winning orders worth 1,025 crores in T&D and the cables business. So with these orders now coming in, the year-to-date order inflow for the company now stands at over 5,000 crores. Keep in mind that the company had guided for an order inflow of almost 25,000 crores in FY25, and so far the company has managed to achieve nearly 20% of its guidance. In fact, the management also joined us recently and indicated that currently the order book stands a little over 30,000 crores. They've got an L1 position of almost 8,000 crores and nearly 90% of this L1 book is in the T&D space. They also highlighted that government bodies are going back to their board for awarding projects with the elections now behind. So they're expecting L1 conversions to order soon, and in fact they're expecting a lot more ordering activity in the second quarter as compared to the first quarter. They also additionally said that they've bid for large solar projects and they're expecting to bid for some more of these solar projects. So overall, they're winning quite a few orders, and as a result, the stock is abuzz in the trading session today.
Vamakshi, thanks a lot for that update. A new record high in today's session for KC International, around 968 is the intraday high. The stock significantly off the highs of the day, but still managing to hold on to gains of around 2.5%. But on to some primary market action now, and Mcure Pharma's 1,950 crore IPO has opened for subscription today. Now, earlier today, we spoke to the company's managing director and CEO, Satish Mehta, and he said that 48% of the company's revenue comes from the domestic business. Listen into a slice of that conversation.
48% is being given by domestic, contributed 52% comes through from export. I would like the ratio by and large, will remain same, but I wish, as far as the domestic is concerned, it tilts, towards domestic. I'll be happy if domestic is 53, 54, 55, and as far as the exports are concerned, that is, 45, 50 or whatever it is. So we do around 45% in chronic and 55% in acute. Obviously, as far as chronic is concerned, the margins are better, and company will keep on, focusing on that. That as far as the 1,000 medical representatives that we have added, it takes time, to reach the productivity, desired productivity. So as we increase the productivity, that should also have a positive impact, on the EBITDA and margins that we have.
Okay, all right. Stainless steel wire manufacturing company Bansal Wire Industries 745 crore IPO opened today as well. 560 crore rupees from the IPO will be used to repay debt. We spoke to Arun Gupta, the chairman and whole-time director, and Pranav Bansal, the managing director and chief executive officer of the company. Let's listen into the excerpts of that conversation.
We are coming with a 745 CR IPO, out of which around 560 will be repaid against the old debt, which will satisfy almost maximum debt what we have, and balance money we will use, because we are a growing company, we will use for a working capital from there on.
We are very happy with where we are, with the kind of margin profile that we have today, because we believe our return on our investments are quite okay. Going forward as well, because the kind of products that we make, we consider it to be a backbone of any industry in India today. Therefore, we are still relying, and we will heavily bank on these product mix. We are today almost at full capacity. For the last 2 years, we've been at peak capacity utilization, with 2.5 lakh tons of our full capacity being there. But now, and only this year, we've started production in the 5th facility of ours, which, as I said, is India's largest and one of the largest wire facilities there is in Asia. And that facility standalone has a capacity of 3.5 lakh tons. So basically, what I'm trying to tell you is that from 2.5, we are jumping to 6 lakh tons of capacity.
It was a busy 2023 for IPOs. It was a busy first half of 2024 for IPOs, and it promises to be an equally busy second half as well. Some primary market action coming your way. But with that, it's a wrap on this edition of Midcap Radar. From Sonal, me and the team that put this show together, thank you so much for watching. Your stocks up next.